All right, let's talk about Upexi Inc. because their latest earnings report was, well, it was a wild one. I mean, we're talking about a company that basically flipped a switch, going from an Amazon seller to a straight up Solana Treasury play. It's one of the craziest pivots you'll see. So the big question is, how did Wall Street take it? Let's dive in. So get this, the headline number, that revenue beat, it was a monster, 109%. They absolutely crushed what analysts were expecting. Now you hear that and you're thinking the stock has to be a rocket ship, right? But nope, it popped for a second and then just cratered, dropping 23% in about a week. So what on earth is going on here? That's the puzzle we're going to piece together today. Okay, so to really get why the stock did what it did, we've got to look under the hood at the actual numbers. And what you find is this classic tale of two cities situation, a story of two totally different metrics pulling in opposite directions. And you can see that split perfectly right here. On one hand, you've got revenue coming in hot at $9.2 million. That's a huge beat over what the street was looking for, a total win. But then you look down at the bottom line, the non-GAAP EPS. A loss of 12 cents a share. That's a big, big miss. So it really makes you ask the question, how in the world do you beat on the top line by so much and then miss on the bottom line by a mile? Well, here's your answer. That massive revenue number, it wasn't from selling stuff on Amazon. Nope. $6.1 million of it came from staking Solana. It's a brand new income stream. Meanwhile, that ugly operating loss tells you their original business, yeah, it's still losing money. Oh, and if you saw a positive GAAP number floating around like $1.21, just know that was purely a paper gain because the value of the Solana they hold went up. It's not cash in the bank from operations. So you have to ask, what is this all about? Where did this huge shift come from? Well, management isn't being shy about it at all. They're basically taking a page directly from the MicroStrategy playbook. You know, what they did with Bitcoin? Upexi is doing it with Solana. Let's break down exactly how that works. And this wasn't an accident. The CEO, Alan Marshall, came right out and said it was a strategic decision. He basically said the whole Amazon aggregator thing was getting, and I quote, increasingly more difficult. So they looked around, saw what MicroStrategy was doing, and said, hey, we can do that. They decided to totally reinvent themselves to become a vehicle for buying and holding a digital asset. And their game plan is actually pretty straightforward. You can break it down into 4 steps. Step 1, go out and raise a ton of cash. We're talking hundreds of millions by selling new shares. Step 2, take all that money and buy Solana. Right now, they're sitting on over 2.1 million SOL. Step 3 is where it gets really interesting and a little different from MicroStrategy. They stake that Solana to generate a yield, a recurring revenue stream, so their balance sheet isn't just sitting there, it's actually working for them. And the whole point, step 4, is to use that engine to drive accretion. In simple terms, they want to increase the amount of Solana backing every single share of their stock over time. The goal is to make your slice of the SOL pie bigger and bigger. I mean, just look at this chart. It tells the whole story right there. In literally 1 quarter, Upexi's entire identity has changed. That little sliver, that's their old consumer brands business. The huge chunk, that's the new staking revenue. It's completely taken over. Make no mistake, this is the new Upexi. All right, so now that we know the backstory, what did management have to say about the future? As you can probably guess, the whole earnings call was laser-focused on this new crypto narrative. And they dropped one number that you really need to pay attention to. They said their current run rate on staking revenue is over $75,000 a day. That's huge. And what's even more important is they pointed out that the second quarter will be the first full quarter that they're staking their entire 2.1 million SOL position. So all else being equal, that staking revenue number should be even bigger next time we hear from them. But it wasn't just about the numbers. Management really wanted to send a message that they're being disciplined and serious about this. They kept using the word prudent, talking about how they're capping their leverage and staying away from any crazy, risky on-chain trading. To add some serious crypto street cred, they brought in big names like Arthur Hayes and Sol Big Brain to an advisory board. And then, the cherry on top, they announced a new $50 million share buyback. That's a huge signal of confidence and gives them a powerful tool to support the stock. Okay, so let's circle all the way back to where we started. Management is painting this really bullish, disciplined picture. So why on earth did the stock pop and then immediately drop? You can see the whole roller coaster ride right here. Before the call, the stock's at 321. The day after, it gets a little bump, about 5%, up to 338. But then, whoosh. Over the next week, it gives back all of that and then some, falling all the way to 260. It seems pretty clear that whatever initial excitement there was, it quickly wore off as people started to really think about the risks here. And this, I think, is the absolute core of the issue. You've got two completely different stories being told. Management is out there talking about prudence, long-term value, and accretive capital allocation. But the market? The market is hearing, blah, 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 you're a leveraged bet on Solana. Traders aren't looking at this as a long-term company. They're looking at it as a proxy for Sol. They care way more about the daily price swings of the coin than they do about the CEO's 5-year plan. So let's wrap this all up. What does this mean for the next quarter? What are we watching for? And what's our official call on the stock right now? Okay, for the Q2 report, here's what's on my watch list. First, I want to see that clean, full quarter staking revenue number. That's going to be a big one. Second, I'll be listening for any updates on that $50 million buyback. Did they use it, and how? And third, you can bet they are going to be talking nonstop about that SOL per share metric. But let's be real. At the end of the day, the stock's performance is almost certainly going to live and die by the price of Solana. It's really that simple for now. So, with all that in mind, our official rating is going to be market perform. Look, the strategy itself is pretty fascinating, right? It's innovative, and you have to give management credit. They are moving fast and being aggressive. But, and this is a huge but, the company has effectively tied its entire fate to a single, incredibly volatile asset. Until they can prove they can create real, tangible value that isn't just a reflection of SOL's price chart, the risk is just too high for us to be any more bullish than that. And of course, just a reminder, this is not financial advice. All of this is just for informational purposes.